Joining us today for our PPP2 webinar. I hope you find the information presented today is exactly what you need to help you with the PPP process. I would like to introduce to you Camille Shaw, who will share some brief information about the SC NBDA. Camille?
Thank you, Chiquita. Good afternoon, everyone, and thank you so much for joining today's PPP workshop. My name is Camille Shaw, and I am the project director for the South Carolina MBDA Business Center, which is operated by DITSA. Before we begin, let me give you a quick overview of our center. The South Carolina MBDA Business Center is funded by the U.S. Department of Commerce, Minority Business Development Agency. Our center works with minority businesses throughout the state to help them scale up and build capacity. We serve as strategic consultants to help small businesses grow to the next level and to meet the challenges of today's changing business climate. Last year, we assisted our clients in obtaining over $33 million in contracts and $53 million in financing. Prior to the pandemic, there were over 243 minority owned businesses in the states of South Carolina and North Carolina. We know that many of you may have received PPP funding for round one and are ready to apply for PPP round two. So that brings us back to why we are here today, which is to share information, to make sure that you have the support that you need, the information that you need, so that all eligible businesses may obtain PPP funding for the overall sustainability of your business, jobs, and the economy. We are offering free one-on-one assistance to help you determine if you qualify for PPP round two. We are available to speak with you about loan forgiveness and help you package your PPP application. And again, this is at no cost to you. So stay tuned with us until the end of the webinar so that we'll let you know how you can schedule an appointment or submit questions. But before we begin, I would like to thank our sponsors, our partners for joining us with presenting this webinar to help you obtain funding. Our partners include the South Carolina Department of Commerce, the City of Columbia Office of Business Opportunities, UP Community Fund, Optus Bank, and Smith, Curry, and Hancock. So thank you again for joining us, and we hope that this workshop will be beneficial to you. At this time, I would like to turn the program back over to our moderator, Ms. Chiquita Jones, so that she can carry out the program. Thank you.
And thank you, Camille. Again, good afternoon to everyone. My name is Chiquita Jones, and I'll be serving as your moderator. I'm going to do my best to keep things moving pretty quickly, but making sure that we've covered all the high points and ultimately making sure that your questions are addressed. Also, you may hear our presenters give some of the same information, but that's just because they want to be sure that the information is received and understood. During the registration process, you all were asked if you had a question that you wanted our presenters to address. Those questions have been forwarded in advance to our presenters to review. So if you did submit a question in advance that was not addressed during the course of the webinar, or if you just have a question in general, please feel free to submit your question at any time to the Q&A section, and we'll address them all during the question and answer session at the end of the presentation. You will also be given information where you can get questions answered and make an appointment for one-on-one assistance. Now, as we get started, I'd like to take a moment to introduce to you today's presenters. First, we have Matthew Cox, who heads up the Columbia office of Smith Curry. He is Martindale-Hubbell AV rated among his peers as well as the judiciary and has been practicing since 1999. Matthew, who is a partner, focuses his practice in the areas of construction law, commercial law, and government contracts, with his emphasis in litigation and compliance. David Sharp is the founder and CEO of the Up Community Fund. He is responsible for the overall management of the fund, which includes deal sourcing and investor relations. David is also founder and CEO of Urban Advisors, a national impact investment consulting firm. And we have Mr. Dominic Martin, who is president and CEO of Optus Bank, a U.S. Treasury certified CDFI and FDIC designated minority depository institution. He spent more than a decade as a senior executive officer and executive vice president at Southern Bank Corp., a community development bank, and is the former CEO of the affiliated lending company, Southern Bank Corp Community Partners. So as you can see, ladies and gentlemen, we've got some great presenters today that have some great information that we hope that you'll be able to use to help you through the PPP process. So let us begin. Matthew?
Thank you, Chiquita. I appreciate it.
Quite welcome. Now, Matthew, as you begin, I know you've got a poll question. Let us introduce you to our audience by getting started with the poll question. If you would, to our audience, did you apply for PPP in the first round? If you would answer the following question. Wow, it looks like about half of you applied and received a PPP loan. But we've also got 33% of you that did not apply because you didn't think you would qualify. Well, let's see if we can change that today. Matthew?
Thank you, Chiquita. Yeah, it's not surprising that we had a good amount of you who qualified and who received PPP in the first round. That closed on August 8th of 2020. And when it closed, there were actually 432 minority deposit institutions and community development financial institutions who participated. And so there was more than 221,000 loans that were given for around $16.4 million for minority and disadvantaged businesses. This time around, there's 15 billion that is set aside. It's a smaller amount than the original PPP, but still quite a lot of money that's out there. Not less than 15 billion is set aside for loans to very small businesses, 35 billion for loans to qualified businesses without a PP loan. That is monies that are set aside for other purposes, but are still out there. You wouldn't be eligible for the loan forgiveness on those, but those loans are available. And not less than 25 billion for a second draw PP loan to small qualifying businesses. So very small and small businesses are very much in the mix here. Next slide. So there's additional eligibility this time around, and that eligibility goes to 501c6s. 501c6s are companies that are, everybody's heard about 501c3 nonprofits, but a 501c6 is a company where they are business leagues, chambers of commerce, real estate boards, boards of trade. They're not organized for profit, and no part of the net earnings goes to benefit any private shareholder or individual. So those are expanded to be included in this round, as well as destination marketing organizations, such an organization that promotes travel destinations and vacation destinations can also participate. Housing co-ops as well, and expanded opportunities this time around for TV, radio stations, and newspaper publishers. Next slide. There are some restrictions that we'll talk about just briefly, but you have to have been in operation on February 15th, 2020. That's the designated point in time when the coronavirus came to light and the original CARES Act and the first PP came around. And because that is the cutoff date then, it is the cutoff date now. So if you weren't in operation prior to February 15th of 2020, your business would not be eligible. Grant recipients under a shuttered venue operator grant program also have some restrictions. A shuttered venue operator is those areas of economic aid to hard-hit small businesses that were actually closed by different orders We did not have the extent of shelter in place here that were in other parts of the United States, but certainly there are grants that are eligible if your business was closed, such as gym memberships and certain bars and other movie theaters. Eligible applicants can qualify for these shuttered venue operator grants that equal 45% of the gross revenue earned, with a maximum amount available for a single grant award of $10 million. Now, PPP loans, as we'll talk about here in a minute, are limited to $2 million. And just because you get a grant doesn't mean that you can't also get a PP loan, but there are some restrictions, and we can talk about those if anybody is in that realm. The other restriction is on publicly traded companies. They are not eligible for PPPs. I'm sorry, next slide. Thank you. Private clubs and other entities are not eligible for SBA loans. There's general prohibition on political or lobbying activities. So businesses that are set aside just for those activities are not. There are restrictions for PRC. PRC are those People's Republic of China entities or Hong Kong affiliated entities. A borrower is ineligible for a second draw if the entity is created or organized under the laws of the People's Republic of China or Hong Kong, or has significant operations in the People's Republic of China or Hong Kong, and holds 20% or greater interest in the borrower, or a member of the borrower's board of director is a resident of the People's Republic of China. And also there are ineligible businesses that are required to register under the Foreign Agent Registration Act. So if your business is sponsored by a foreign entity that is required to register, or owned by a member that is required to register under the Foreign Agent Restriction Act, you would not be eligible for a PPP loan. Next slide. So who is eligible? Well, there are owners and sole proprietors, independent contractors, even self-employed individuals, as well as owners who have a business who have up to 300 people. If you have more than 300 employees that work for you, and that includes yourself, then you would not be eligible, but less than 300 people. If you have used the full amount of your initial PPP loan, for those of you who took a PPP loan in the first round, you're eligible again, provided that you used all of that loan, and that you have lost at least 25% of your revenue in any quarter in 2020 compared to that same quarter in 2019. Now, as we said, the maximum amount of that loan this time around can be $2 million. And so it depends on the date of your loan as to whether either you want to use 2019 or your 2020 return. If your salary or anybody's salary that you are applying for, and this will come into how you calculate your eligibility or the amount that you can loan under the PPP, is over 100,000, then it has to be reduced to $100,000, because anyone who is paid greater than $100,000, that amount over that 100,000 is not eligible for payment under the PPP. You can't use it for that purpose and then receive loan forgiveness that we'll talk about here in just a second through the other presenters. But if you did by chance loan that and use it, then the difference would be is that money would not be eligible for forgiveness. It would have to be repaid. If you did not receive any money, if you did not make any money, then you're going to find out when you do the calculations that you're not eligible, because you had to have had revenues. So that's very important that you be able to establish revenues. There's a multiplier in the PPP, and we'll talk about it again as we go through this presentation. Most borrowers, the maximum amount of the loan, again, it's 2.5 times your average monthly payroll cost for that period of time in either 2019 or 2020, whichever you choose to use. And if you are in accommodation or food service sector, that would be you have a classification, NAICS classification of 72, then the maximum amount of loan that you could do is 3.5 times your average monthly payroll for 2019 or 2020, up to $2 million. So you calculate what that is, and then you apply the multiplier. And depending on the dates of your loan, if you had an EIDL grant or EIDL loan, then that would reduce the amount also that you can loan. Next slide, please. So eligible both for use and forgiveness: covered operations expenditures, covered property damage cost, supplier cost, worker protection equipment. Those kinds of things are allowed. Last time it was limited to rents, and it was limited to mortgage payments, not for the principal, just for the interest. It was utility bills, so forth. So there's some additional expenses you can use this time around. Next slide. It's a government program, so the loan may be forgiven, doesn't mean that it will be, but only businesses willing to comply with the paperwork requirements of the program should apply. You have to keep the paperwork for the cost that you expended on and be able to show the bank, the lender, what you use those monies for. And there is some reduced record keeping for smaller businesses, but record keeping is still vitally important. Next slide. The covered period was originally 24 weeks, although earlier borrowers could choose between 8 or 24 weeks. The new covered period for loans that are taken after December 27, 2020, the date begins on the origination date, and it ends, you can again select between 8 or 24 weeks after that origination date in which to apply those costs of the PPP to expenditures that are forgivable. Next. For loans of $150,000 or less, there's a streamlined application. The other things you're asked to do is retain all employment records relevant to the PPP for a 4-year period following your submission of the application, and 3 years for all other relevant records. And the SBA has the right to review and audit any PPP loan at any time for fraud, ineligibility, or other noncompliance. The question I think here is just to make sure a business had to be in operation prior to February of 2020, and that is correct. If you were not in operation, if you just started in 2021 or you began after February of 2020, you would not be eligible for PPP loans. All right, next slide, please. Proceeds can be used for the same purposes, including the additional expense categories. Again, that is rent, that is interest on a mortgage payment, that is utility cost, and then obviously cost of payroll, which would include vacation, sick leave, those other items that you can use for expenses. You have to have fewer than 300 employees. Gross receipts during any quarter in 2020 demonstrating a 25% reduction from 2019, whatever period of time you choose to use, whichever quarter. Even if you made, let's say in the second quarter, you lost more than 25%, but you gained it back in the third and fourth, they're only looking to that second quarter. And there's a $2 million maximum amount. Next slide, please. Affiliation rules apply. Affiliation rules are very complicated, but that would be if you own multiple businesses and multiple businesses would be wanting to apply. You're not supposed to exceed those amounts. And for affiliation rule purposes, you would combine those companies to make sure that revenues did not exceed for small business purposes and number of employees do not exceed for small business purposes. Next slide. If the funds are not forgiven that you received through the PPP loan, there's a maturity date of 2 years. Interest rate is low at 1%, and the lenders are required to provide borrowers with complete payment deferment for a period of not less than 6 months, including payment of principal, interest, and fees, and interest will continue to accrue until the loan is paid in full. Next slide. You can pay back any unspent funds or unforgiven amounts immediately with no prepayment penalty. So you can pay it back anytime if you're not going to use it. Next slide. And remember, there are penalties if you give false information to the government. and they are criminal penalties as well. Next slide. So just real quick, these second draw loans are now available. You can use it for payroll cost, including benefits, mortgage interest, rent, utilities, worker protection costs, for PPE and those things to keep people safe from COVID, uninsured property damage cost if it was caused by looting, and vandalism during 2020, and certain supplier costs and expenses for operations. And I didn't mean to jump on David's, so I'm going to stop. Sorry.
No problem. No problem. Appreciate the opportunity. Glad to be here. I believe we're kicking off with a survey question at the beginning or at the end, just for confirmation.
Right now, we're going to start your presentation off, David, with the poll question. Okay. The poll question: if you received a loan from PPP round 1, have you gotten loan forgiveness? Yes or no? Or I don't know how to go about getting loan forgiveness. Wow, right now we've got about 50 to 60% of you who say that you don't know how to go about getting loan forgiveness, and about 35% of you say you have not received loan forgiveness. So hopefully we've got some information to help you guys out with this. David?
Great. All right. So let's go ahead and jump right in here. Close this pop-out screen. All right. So again, I'm David Sharp. I'm CEO of the Up Community Fund. We are an impact lender based in the Carolinas, Charlotte specifically, but focusing on the Carolinas and Georgia. We actually, the majority of our portfolio consists of entrepreneurs of color. So that's been our kind of our focus area. And actually 87% of our companies in our portfolio, we directly help to get PPP loans. And so the fact that when I looked at the survey and I saw that majority of people don't necessarily know how to go about seeking forgiveness or have not applied for forgiveness, I think this is very, very important and appropriate that we're talking about this now. Because clearly the very first thing that you have to do in order to apply for the second round PPP is to actually get forgiveness for the first round PPP. It doesn't necessarily have to be approved, but it needs to be in the system with whoever that lender is to allow you to apply for the second round of PPP. So I'll walk through these slides and then come back to try to circle the wagons with some of these points to provide some clarity. The second draw loans are made to eligible borrowers, again, who have qualified for the full loan forgiveness during the first phase of the PPP. And again, what that really represents is they cover an 8 to 24 week period of time after the date that you receive the loan funds. So I know, as an example, as we work with certain institutions, and every financial institution is different, mind you, but we worked with one that actually had a chart where you literally just put your payroll numbers in either every week or every other week. And if you say got a $50,000 loan and your payroll was $4,000 every pay period, if you tracked it over that 24-week period of time, you would just reduce the amount of the loan by each one of those pay periods. And ideally, the pay period or the payroll would be greater than the amount of the loan. If not, then obviously there are other elements that you would integrate to help get the full forgiveness. So again, it's the loan or the payroll plus whatever employee compensation that are provided as well. The loan proceeds again are spent primarily on payroll and eligible expenses, and at least 60% of those proceeds will be spent on payroll costs, which I think is a very important point here. The primary purpose of this program is for payroll, so you want to make sure that you can demonstrate that at least 60% of the money that was received can be demonstrated and documented that it was utilized for payroll cost. Next slide. The borrower is generally eligible for a second draw of a PPP program if the borrower has received the first round and has deployed or used most of those, well, actually all of those proceeds from the first round for eligible purposes, which is primarily payroll, has no more than 300 employees, and you can demonstrate at least a 25% reduction in gross receipts. So if we just take an example here for a moment, and let's just say you are a company that you did $1 million in 2019 in total revenues. That would equate to, say, $250,000 per quarter, right? So 250 times 4 makes $1 million. So in 2020, if any one of those 4 quarters in 2020, say you did 187,500, which would represent a 25% reduction on any one of those 4 quarters, you would qualify. I think it was mentioned earlier, Matthew mentioned, even if there's another quarter, even if you mentioned another quarter that your proceeds were actually higher than the previous year, as long as you can demonstrate that there's one quarter where you have a 25% reduction. That's the main qualification. So as we're working with the companies in our portfolio, one of the things we tell them is that we had one borrower who said, well, I don't think I qualify. We said, look, go into your QuickBooks, whatever system that you use, determine what your revenues were for quarter 1, quarter 2, quarter 3, quarter 4 for 2019. Do the exact same thing for 2020, quarter 1, 2, 3, and 4, and compare each one on a quarter by quarter basis, Q1, Q1, 19, 20, Q2, Q2. And if there's a 25% difference in any one of the 4 quarters, you qualify. So that's I think an easier way to not get confused in terms of what the rules and regulations are, but fall within that tight parameter, I think is a clear way to look at it. Next slide, please. So the maximum loan amount, this is pretty consistent with the last round. So it's 2.5 times the average monthly 2019 or 2020 payroll costs. Some of the banks that we have been working with some of the companies in our portfolio, they allowed the companies to either take 2019's numbers that they used for the first round PPP and actually use those exact same numbers, or you have the ability that you can use 2020 payroll costs. Let's just say your 2020 payroll costs ramped up overall and you have a higher average, then obviously you would select which one would be the higher of the two. And it would be 2.5 times whatever that monthly average is, up to $2 million. One of the new kind of caveats within the program is for businesses that are in the accommodation and the food service sector. The program allows you to go up to 3.5 times the average monthly payroll. So you get an extra, what I would call a turn of payroll base, which I think is attractive for some of those businesses that have been more directly hit from COVID as compared to other sectors and other industries. Next slide, please. In terms of how to apply, I mean, the process is pretty much the same as the last round. You can apply through any kind of 7A lender, any FDIC bank, FDIC credit union, or eligible non-bank lender, or even Farm Credit System institution. And all those second round PPP loans will have the same terms regardless of lender or borrower. What you'll probably realize, what we experienced, was that most of the lenders would ask for different pieces of information because part of that would represent what their internal process is. But at the end of the day, the information that they provide to the SBA is pretty much uniformed regardless of who that lender actually is. Next slide. Key theme here is March 31st is the deadline for the second round of PPP. And I think if we learned anything else from the first round, what we learned was that let's try to get our documentation in, our application in, our process in sooner rather than later. If the money runs out, it's unclear if there will be additional dollars provided. And so it's probably going to be a first come, first served basis scenario, unless we hear otherwise. But probably advise most of the folks on the call, do not wait until the last minute. If you can get it in earlier, great. If there's a reason that you can't, then it's understood. Do the best you can. Next slide. Ensuring access for all. One of the things that occurred during the first round, I'm sure you all, probably saw this, you read it, you heard about it, was that a number of entrepreneurs of color were denied access or were not able to get access to the first round of the PPP program before the money ran out. And so they basically got a lot of feedback from a lot of small business owners across the country, especially the ones of color or the organizations that service that population, and in essence created a carve-out program as part of the second round PPP, where there was a kind of an initial window on the front end of on the second round PPP program, where CDFIs, which were community development financial institutions, or MDIs, which were minority depository institutions, minority-owned banks, credit unions, et cetera, were given, in essence, first dibs in terms of being able to process applications and submit on behalf of those small businesses within their kind of universe. And so again, it's now open to all lenders, but the minority lenders had an initial kind of window of time in order to process applications before the mainstream banks came on board. Next slide. I got approved. And so again, I think if we can, seize the moment, we recognize that you all are small business owners. You are active running your business on a day-to-day basis. You're dealing with paperwork. You're at the end of the year. You're probably beginning your tax preparation season. You're trying to go after new contracts. You got all these things going on, but I would strongly advise that you allocate some time towards this PPP process, because these are resources that are available for small business owners. And if you follow the steps, you can get approved. And so I think that in and of itself is worth pursuing. The next slide, which really kind of represents my last slide, is that a couple of the themes and takeaways that we experienced working with our portfolio, helping them they got over $1 million within the first round of the PPP. And the majority of them actually a couple of them have received second round PPP, and some are at various stages. So I want to share some of the themes that we observed by working with each one of them. Most of them worked with different lenders. So so I'm sharing some perspective across the, kind of across the spectrum, if you will. PPP lender relationships are key. We've had some companies of ours within our portfolio that had a direct relationship with somebody at that organization who provided them first round PPP. And they were able to pick up the phone. Hey, the portal's not working. Hey, I'm having a problem with this. Hey, do I have the right documentation? You dinged me on that piece of documentation. No, it needs to be this other piece of information, right? And so if you have those relationships, you can pick up the phone and ideally talk to somebody. And so I think that's a very, very important theme. The ones who it took longer to get to the finish line had weaker relationships, and the ones who got their money the fastest had stronger relationships. The next point here is that every lender operates differently, regardless of the SBA's rules and regulations. So each lender has a different set of criteria. Although it's uniform from the SBA's perspective, each lender, I noticed, still asked for different pieces of information in terms of a follow-up. There were different pieces of information that they wanted from PPP. Maybe it was backup for their own systems to make sure that there'd be no compliance issues going forward. Everyone's going to ask you for something different. It's okay. That's just part of the process. Have a third-party payroll system. I know it's a little kind of after the fact now to say this point, but what we've also noticed is that the small businesses that are doing payroll in-house versus the ones who are using systems like ADP or others, the third-party payroll systems have made the PPP loan forgiveness portion, as well as the new process for the second round, a much easier system. ADP is an example, and this is no endorsement for ADP, mind you. They actually have a report for the forgiveness and a report for the go forward second round PPP. All you got to do is click a button and provide that to your lender. So having a third party payroll system, I noticed made a huge difference in how easy or how challenging it was for a small business owner to be successful in round two. Next point is SBA or lender may ask you for random information. We've seen one lender where they came back and they were asking for things that seemed to be random, but the borrower had to provide it. That was just the name of the game. And then the last point here is have all your documents organized. If you know folks are going to ask for the same pieces of information over and over, put them in an electronic folder somewhere and do that now, so that when they ask for it, it's not a mad dash to try to find pieces of information in random places. And I think if you're able to do that, your forgiveness of round one, go back to your original funder. That's your best option. And in terms of getting the PPP second round, go back to whoever your initial lender was. It's probably easier for them to get through your process because they have most of your information from the last round. Hopefully I didn't exceed my time.
Not at all. Thank you so much, David. That was great information. Before we bring on Mr. Martin with Optus Bank, we've got one additional poll question for you to get him started. If you received an EIDL, do you intend to apply for a PPP loan? Wow, that was quick. 100% of you said yes. Thank you very much. Dom?
All right, well, thank you so much. And it's such a pleasure to share this time. I really enjoyed David and Matt sharing their expertise, and thank you all for putting this together. If we can go to the next slide, I'll launch right into our presentation. I wanted to share a little feedback that we received from our customers from a survey company that partnered with us, and we really wanted to make sure, in anticipation of a second round, that we learned from our customers, that we listened to our customers, and we did a better job serving them by listening to their feedback, their perspective, because we as lenders, you heard David give some great tips on how to maximize your success with the application process. If we can go to the next slide. We were really proud of the fact that over 60% of our customers were minority-owned businesses, particularly Black-owned businesses. And also you can see almost over 40% were women-owned businesses, which is, our target market is similar to what David described. We are not just a minority-owned bank, Black-owned bank, but we're a community development financial institution, and we intentionally try to address the systemic disparities in the financial system by providing capital and resources to communities and people that have been excluded. And so we were pleased to see that we were able to hopefully close a little bit of this gap. Next slide, please. And this was really very actually troubling to see some of the feedback about how much impact the pandemic has had, particularly on minority and women-owned businesses. It was really a staggering difference between those businesses and the white-owned businesses. And so again, the disparities that we're all trying to solve continue to persist, sadly. Next slide, please. And this is what I'm referencing. So you can see the outcomes would be so much so much more dire for some of the minority businesses had this program not been around. All right, next slide, please. This is a little bit about our institution. Again, it's not an accident that we ended up serving predominantly minority and women-owned businesses. Our history and our founding mission is to close the gap, and you can see that margin and mission can coexist. You can have a mission-driven financial institution, particularly even a highly regulated bank, and still be viable in serving a community. And we're really proud of being the only Black-owned bank in South Carolina, one of 18 nationally, and I wish it was a lot more than that in our country, but hopefully that's going to change. We're also CDFI, as I mentioned. Next slide, please. So what we tried to do by listening to the feedback from the first round last year, or first 2 or 3 rounds, however you want to count them last year, we wanted to make it as easy as possible. And David is absolutely right. If you got your PPP loan from an institution and you got decent service and you were happy with it, go back to them, because it'll be easier. And we are encouraging even people that reach out to us, unless they had a really terrible experience or had some obstacles with their first PPP lender. We love to serve them, but if they can be served by their first PPP lender, that probably would be a little faster for them. But we built a very good portal to make sure that we try to address some of the complexities and concerns from the first round. Next slide, please. Let's go ahead and skip that, please.
Thank you.
Yep.
Got one more poll question for you, ladies and gentlemen. What is the most common problem that could cause your application to be kicked back? Misspelled words, incorrect dates, missing documentation, or all of the above? Okay, we've got about 57% of you that said all of the above, and about 43% that say missing documentation. Although missing documentation is critical, you certainly need the all of the above as well. Dom?
Yes, thank you very much for that. Appreciate that point. So next slide, please. Okay, so that's a great setup for this point that David references, and I'm going to reiterate it. We're finding a lot of our applicants not complete the application as quickly and easily and be delayed in their funding because they're either not providing the right information, or they're not providing any information at all that's required, and we have to go back to them and follow up with them, email them, call them, and try to get them to complete the application. So what I'm going to do is take a minute or two and just walk you through our process, not because it's the best process out there, but it's very much indicative of what some of the other PPP lenders have out there. So if you're going through this process right now, please do read the guidelines very carefully and provide everything as requested. Otherwise, you may be kicked back to the beginning of the process and may not get funded. Next slide, please. New borrowers, both Matt and David talked about a little bit of that process, but those are basically the same guidelines as they were last year for first-time applicants. And that process is a little bit more complex than for the second draw borrowers, because for the second draw borrowers, they only need to provide a proof of that 25% decline. Next slide, please. Second draw is generally majority of the applications we're seeing, although we did receive, I would say as of today, maybe about 15% of our applications. In the first round, we processed 511, totaling about 40 million. And this round, we have over 700 applications, and we'll probably have about 100 of them withdraw or not complete. And we're finding that about 350 or so are second draw applicants. Next slide, please. This is the portal, just to give you kind of a look inside. And as David mentioned, every lender is going to have slightly different, maybe system, but the SBA is requiring the same information. So what I'm going to share with you, it should be fairly uniform across all lenders. And if they're following those rules by the SBA, as they should, you shouldn't get a different experience with any of them if you were to go through two different second draw or first draw applications. The basic information is the type of borrower, type of business, documentation about the business's existence as of February 15th of last year. That's what we tried to collect on this page. Next slide, please. More information specifically are required by the SBA. Again, this portal was developed and precisely to actually import directly into the SBA system. So whatever we're asking here is the same set of questions that the SBA is asking. Next slide, please. A lot of our customers are getting jammed up with their applications on the documentation, but some are also, especially those that have more complex business situation, and I'll talk a little bit about that in a minute, with the specific who the borrowers are. Actually, even that for first-time borrowers may be confusing because of all the different entities that they may be managing under their business. Next slide, please. Loan information, you can, as we talked about, you can apply for PPP loan if you have an EIDL loan. You do have to disclose it. We're finding that the SBA is actually rejecting certain applications if the amounts here are not matching exactly what was previously given, both in a PPP or other loans. So make sure you complete this accurately because your application will likely get rejected by the SBA if any of the amounts don't match exactly what was previously approved in the first round, whether it was an EIDL or PPP loan. Next slide, please. I think both David and Mac talked about it, but specifically describing use of proceeds. Again, we built a little tools to help you answer those questions. Next slide, please. We can go ahead and skip on to the documentation. Next slide, please. So this is the one that really is causing most of the problems is documentation. The SBA put out new rules that require businesses that don't have formal financial statements to still submit their quarterly decline proof. And it's not necessarily proof, it's really a document where they attest that the information is correct. And I think Matt talked about this. Make sure it is correct. That this program is going to receive a lot of scrutiny, and we're advising our customers to be very precise and careful with the information they submit. Not that they would intentionally want to do something incorrect, but we want to make sure even accidentally they don't complete something in a way that could get them in trouble, because this program will receive a lot of scrutiny, no question about that. Next slide, please. In the document portal, again, this is where we find a lot of hiccups where those documents are either not uploaded or customers do upload them, but they're not correctly filled out. On that proof of the 25% decline, or if you don't have the exact proof per se, but you're attesting to certain numbers, make sure you initial each page and sign it at the bottom of the document if it's multiple pages. That's something that we are requiring our customers to do based on the guidance from the SBA. Next slide, please. And then finally, we are finding some customers complete everything and then they don't click the submit button. That is actually formally how they attest to all that information being correct. So make sure you complete the process all the way until you get a confirmation from the system that your application has been submitted. Next slide, please. So following up some of the great tips that David provided already, is we want to make sure that we process everyone as quickly as we can. We are getting overwhelmed with demand. We are reaching out to customers. Out of the 700 plus applications we received, we have 300 that are still incomplete, that are missing something, and we continue to really work hard with the customers trying to complete them. But there is a risk that we'll run out of time or money, or both. So We want to make sure that we don't run into that with anyone. Next slide, please. There are great resources out there. We frequently get questions from customers about certain guidelines, and we are finding there are certain cases that are really complicated. If you change your business entity type mid-year, for example, or if you formed a new business in addition to your existing business, there are all kinds of complexities. Or if you brought in a new business partner, there could be all kinds of complexities that will create issues with the application. Especially, we're finding that the SBA is rejecting certain applications because the entity doesn't match their records, even though we know it's correct. And so we're having to go back and forth. So please be patient with us or with your lender, because it is not frequently issue that we're pushing, but we're trying to make sure that the SBA accepts your application. Next slide, please. We do encourage everyone to reach out also if they have any questions. Best way to reach us is by email, and you can visit our site at optusppp.com. You can submit an email or a form from that site with your questions. So that concludes my formal presentation, and I'll turn it back over to you, Shakita.
Thank you so much. Wow, that was a lot of good information, and I know it was a lot to absorb. So I'm sure some of you may have questions, some of which have already been submitted through our Q&A box. And if you have questions, please feel free to submit them at this time, and we will pass them along to our presenters. Our first question comes from Melissa. I don't mind disclosing the affiliation. Since my lender denied my round 2 application stating they could not find my round 1 application, can I reapply now? And if so, how can I change lenders? Matthew, I'll let you take that one.
Sure. So generally, and Dominic and David can correct me if I'm wrong, but my understanding is if the application is pending, you cannot. But once the application has been denied, you can start the process again, depending on what the reason for the denial was. Is that correct, Dominic?
That's my understanding.
Yeah. David, do you have a different understanding?
That's my understanding as well.
Great, thank you so much. Our next question, I may need a little bit of clarification on it. It says CDFI or bank branch with your business account. Which organization to apply round 2 from?
I'd follow David's advice here, and that's what we're advising. If you receive your PPP loan from a lender, go back to them would be what we're telling, unless there's a reason why you don't want to. David, do you have different thought and guidance for them?
No, I think that makes sense. I think I would also say, shout out to MBDA. I mean, they're a great source. And I think if you tell them your specific situation, they could probably, shepherd you to someone who could meet your needs. So I'd reach out to MBDA as well, in addition to what Dominic was sharing.
Yeah, that's great. I agree with that. And in fact, we have a great partnership with MBDA. They're really helping a lot of our customers get their application to the finish line, and it wouldn't be possible without the hand holding and customized kind of service that they provide. So it's a good resource.
Great, thank you so much. Can you apply if you don't have a third-party payroll company, but pay yourself via owner draws?
The answer is yes, but they don't look at the draws. What they look at is how it was reported on your taxes. And so that's where if you have no employees and it's just you, you would look at then how much did you disclose as profit. If you didn't have any profit, then you wouldn't, unfortunately, be eligible. If you had profit, then it's 2.5 times the amount, and we call it profit. But after you reduce your expenses to show that you actually received income from that entity as a sole proprietor.
Great, thank you so much. How much will my PPP loan be reduced since I received an EIDL loan? Gentlemen?
My understanding is that there's no connection between the PPP loan and EIDL loan. There's been conversation around the EIDL grant, but the EIDL loan is actually a separate process, because with the EIDL loan, it actually, this is structured to be a grant, the PPP loan, assuming that you meet all the qualifications. The EIDL loan is structured to be a loan. It just happens to be 20 or 30 years at, 2.7, 3.75, whatever interest rate. But that is designed to be a loan. So they're actually serving slightly different purposes.
Thank you, David. Next question. If I received the first round of PPP as well as EIDL, do I still qualify for round 2 for a PPP loan?
I mean,
John?
Yep.
It depends, right?
Yeah.
You still have to meet those qualifications.
Right.
So let's make sure we understand. There is first draw PPP that's available in round 2, first draw, which is different than someone who didn't get a loan the first time, right? So that's your first draw you would be applying under different qualifications. If you got this is a second draw. In other words, you got a PPP and you've paid it back. And you can show that you had losses in that quarter. That's the qualification for a second draw on the PPP this time. And so as long as they meet those criteria, even with an EIDL grant, they should be fine.
Okay, great. Matthew, would you mind explaining a little bit more about affiliation rules?
That's a whole nother seminar, but what I can basically tell you is the SBA will look to common ownership. They will look at even family relationships. They will look at a number of different things that tie a company together. And if companies are affiliated, then they will look at how many employees those.
So it was at the very beginning.
Chiquita, I'm sorry, you're not on mute. So okay. So they will look at how many employees you have, what is your total receipts, total revenues, to make sure that you still qualify. So affiliation, as long as you are still, when you put your affiliation, you could have 5 companies, and if each one meets that criteria, even after affiliating them all together, each company can apply for a PPP loan. But if you affiliate those 5 companies together and they have more than collectively than 300 employees, and the revenues are such that they're not a small business enterprise, then none of those affiliated companies would be eligible. That's about as simple as I can make it, even though it's complex.
Great. Okay. And it says, just for clarification, can I apply for the second PPP loan if I didn't apply during the first one?
I'll let Dominic take that one. He was just talking about that again. This is Dominic, somebody that's on a first.
Yeah. So there's no reason why you couldn't.
Yeah, I think I would add to that. Well, Dominic, were you saying something else? I'm sorry.
No, sorry. Go ahead.
I would say that I know in some of the banks that we've spoken to, what they've said is that our first priority are the PPP round 1 recipients. And then our second priority would be new relationships for the second round. But the first priority was for PPP recipients in round 1.
Great, thank you. And Raymond asks, just to make sure I have it right, a business had to be in operation prior to February 2020. Is that correct?
That's correct.
Very short and sweet. Okay. I operated a spa which closed due to COVID-19 concerns. However, I still have equipment lease obligations ongoing. Can I get help with this through and a loan repayment situation?
Not under the Paycheck Protection Program, but there's other, as we said in the beginning, there is other monies being set aside that they could, and I would invite you to talk to the MBDA about what those options are.
Okay. And Mr. Mjartan, I think this one was directed to you. It says, if denied for round 2 because I did not apply for round 1, can I now apply for round 1?
Well, if you didn't receive, if you didn't qualify for round 1, you're not going to qualify for a second draw. And if you didn't qualify for round 1 initially, I don't see how you could qualify at this time. I don't know. I'm not aware of any scenario that would be possible.
And round 1's closed. It closed August 8th of 2020. So there's no reapplying retroactively to round 1.
And if I'm understanding the question, the person is saying the reason they were denied round 2 was because they didn't apply in round 1. Am I understanding that correctly?
Yes, that was part of the question. That is correct.
Yeah, well, they shouldn't have been denied based on that. I mean, we have some customers that, for whatever reason, didn't apply or were told mistakenly or incorrectly that they didn't qualify last year. And when we looked at their numbers, whether it's line 31 on Schedule C or whatever basic information they provided us, we're finding some that are qualifying now for first time loans. So that is possible that you can qualify for first time PPP loan. In fact, those customers had the priority for about a week in this year. So we are really encouraging people to come back, even if they were told initially that they didn't qualify. We're finding that some folks got wrong information, or the loan amount was too small and their lender didn't want to help them because the loan amount was too small. Sadly, those are stories we're hearing too. So if you were told that you didn't qualify or you couldn't get help last year, check with us, check with the SBA, check with your lender or another lender to make sure that you're still you're either ineligible or you may be eligible. But that's not necessarily the fact that you didn't get money last year doesn't mean you can't come back or you shouldn't pursue it now.
Okay. And we're down to our last 3 questions of the afternoon. Is it true that the second draw is slower in being awarded than the first draw?
From our experience, it is true a little bit anecdotally, and a lot of that has to do with one, the SBA is taking 2 or 3 days to approve loans because they're now doing reviews of the business entity and the loan amounts. They're doing a little bit more verification. We're also finding the SBA rejecting. We had not a very high percentage, but pretty decent. I think on average, maybe 10% of our applications we submitted were rejected for some reason, but we have to work with the SBA and get them through. So it is taking longer on that side. On a second draw, it's a little bit simpler, so it shouldn't take that long. But again, it depends on what your lender is requiring you to provide. For example, we are requiring our customers to provide a proof of that 25% decline in gross receipts, or not necessarily proof, but a documentation really. We're not required to prove anything. What we're required to do is show that we gathered the appropriate documentation and the borrower attested to that, which does take a little bit longer, and because we want to make sure we don't put our customers in harm's way when they come back for forgiveness. So we want to have all those documents already ready, so when they apply for forgiveness, it's there. So I would say that my simple answer is yes, and these are the reasons. I don't know if you guys, David or Matt, have different or additional information.
Okay. And our last question of the day. My bank said they can't help me. Where can I apply?
Well, two places I would start is you can go to sba.gov, and there's a great lender selection tool that you can find a lender in your area that's doing PPP loans. We're actually finding some customers are finding us that way, where they couldn't get help somewhere. They go to the sba.gov site and they find us. If you don't want to go through that, I encourage everyone to find a local CDFI or a local bank that is to David's point, and Matt was talking about too a little bit. Those relationships are as you can tell from this conversation. Find someone who you have a relationship who's going to take interest in helping you. That would be my recommendation. David, what is your thought on that?
Yeah, I agree. To give just a quick tidbit here, when we participated in the first round, we primarily, worked with our funders. With our borrowers, because we're not a PPP lender. We actually have applied to become one, but it wasn't going to happen in a short enough time. So we had to then pivot and move from the big banks to relationships that we had with smaller banks to shepherd people through the process. So it's one of those things you got to do a little smiling and dialing, unless there's someone that you know in your circle that has a relationship with a smaller institution that is participating in PPP. That was our experience as a practitioner.
Great, thank you so much. Ladies and gentlemen, that brings an end to our question and answer session, and I thank you for your participation. I certainly hope that we've been able to answer your questions and to provide a little more clarity. However, in case we didn't, we've got a poll question up here for you, and this will give you an opportunity to get some free one-on-one assistance to get any more clarity that you need. It says, were your questions answered or your concerns addressed in this webinar? You can answer yes, that you are completely satisfied, or if you still have additional questions and would like some assistance one-on-one, we can give you that as well. Okay, I see that there are a good number of you that still need some one-on-one assistance. Tiffany, if you would go to the next slide, please. Thank you so much. If you are in need of one-on-one assistance, please visit the link below so that you can schedule an appointment with our PPP professionals. They'll answer any questions you have and they'll walk you through the process. And please know that this is at no charge to you. This is a completely free service. We just want to ensure that all of our minority businesses are well served and that they are able to participate in the stimulus program and so that it's equitable. Don't fear the process, but be a participant in the process. We want to make sure that everyone gets the help that they deserve in order to get their businesses back on track. So ladies and gentlemen, on behalf of the South Carolina Minority Business Development Agency Business Center and our sponsors and community partners, I would like to thank you all for participating in today's webinar. We certainly hope that you found this information useful as you go through the PPP process. All webinar attendees today will receive a PDF version of today's presentation. And at the conclusion of today's webinar, if you would, there's a brief 4-question survey that will appear in your browser about the information that was presented today. Your feedback is important to us. We need to know how we're doing and if there's anything else that you would like us to cover for future webinars. So if you would just take a moment to fill that out at the conclusion of the webinar, we would be most appreciative. Again, thank you to our sponsors, our partners, and especially to our presenters today for taking out the time to give you this information, and to you for being an active participant in today's webinar. Thank you so much, and you all have a wonderful evening.